What if the next gold rush wasn't in the mountains, but on the blockchain? Could Bitcoin, a digital currency less than 2 decades old, actually take the throne from gold, the oldest safe haven asset in human history? Let's explore whether Bitcoin is truly becoming the new gold standard for the modern investor. We live in a time of financial transformation. With inflation rising, central banks printing more money, and fiat currencies losing value, investors across the globe are looking for assets that can preserve their wealth. For centuries, gold has served this purpose: durable, rare, and universally accepted. But today, Bitcoin is stepping up as a contender, and it's not just a passing trend. In fact, according to a 2024 Fidelity report, 32% of institutional investors already own digital assets like Bitcoin. Hedge funds, pension funds, and even governments are exploring Bitcoin as part of their diversified investment strategy. Gold and Bitcoin share a critical trait: scarcity. Gold is physically limited, and Bitcoin has a hard cap of 21 million coins. Unlike fiat currencies, no central authority can print more Bitcoin, making it resistant to inflation. But Bitcoin also goes beyond gold in several ways. It's borderless, instantly transferable, and divisible down to 100 millionth of a coin. While gold needs physical storage, Bitcoin is digital. You can store millions of dollars on a USB-sized hardware wallet. Furthermore, Bitcoin runs on a decentralized blockchain network, which ensures transparency, security, and immutability. Every transaction is verifiable on the public ledger. Unlike gold movements, which can often be opaque or manipulated in central vaults. But let's be honest, Bitcoin comes with its fair share of challenges. Volatility is the elephant in the room. While gold fluctuates slowly, Bitcoin's price can swing wildly in a matter of hours. For example, in 2021, Bitcoin surged to nearly $69,000 before falling by more than 50% within months. This level of price action is intimidating for conservative investors. And then there's the regulatory environment. Countries like the US are still debating how to classify and tax cryptocurrencies. Some nations like China have banned crypto mining altogether, which adds uncertainty to Bitcoin's global standing. Despite the volatility, Bitcoin's technological advantages cannot be ignored. Unlike gold, which requires physical logistics, Bitcoin transactions are fast, secure, and low-cost, especially with scaling solutions like the Lightning Network. Also, accessibility is a game changer. In many developing countries where banking services are limited, Bitcoin allows individuals to store value and transact globally without relying on traditional banks. This has massive implications for global financial inclusion. Let's also not forget that Bitcoin operates 24/7, no holidays, no banking hours, can send or receive money anytime, anywhere. The 2020s marked a turning point for Bitcoin's legitimacy. Major companies like Tesla, MicroStrategy, and Square added Bitcoin to their balance sheets. Payment giants like PayPal and Visa now allow users to interact with crypto directly. Even traditional investment firms like BlackRock have launched Bitcoin ETFs, bringing regulated exposure to everyday investors. And in 2021, El Salvador made history by becoming the first country to adopt Bitcoin as legal tender. All of this points to a trend. Bitcoin is no longer just for crypto enthusiasts. ESM entering the mainstream financial system. Bitcoin's price history shows incredible long-term returns. From just $0.003 in 2010 to over $60,000 at its peak, it has outperformed every other asset class over the past decade. And while past performance isn't a guarantee of future results, it signals the asset's growth potential. Its decentralized structure also offers resilience against geopolitical instability, censorship, or capital controls, something gold cannot do digitally. Gold's total market cap sits around $13 trillion. Bitcoin's is hovering around $1.3 trillion. If Bitcoin were to flip gold, the price per Bitcoin could reach over $600,000 based on current supply. While this sounds ambitious, many analysts, including those from JP Morgan and ARK Invest, believe Bitcoin has that potential in the next 10 to 15 years. Whether Bitcoin ever fully replaces gold is uncertain, but what's clear is that it's already disrupting traditional investing models and shifting how wealth is stored and transferred globally. Bitcoin isn't just digital money, it's a new paradigm for storing value. It's enabling freedom and building wealth in the 21st century. With its scarcity, portability, divisibility, and global accessibility, it's already checking many boxes that made gold a go-to asset for generations. Will Bitcoin fully replace gold? Maybe, maybe not. But ignoring it now would be like ignoring the internet in 1995. So what do you think? Could Bitcoin really become the new gold standard for investors in this digital age? I'd love to hear your opinion. Drop a comment below. And if you found this video helpful, give it a thumbs up, subscribe for more crypto insights, and check out my other videos on investing trends and financial freedom in the crypto era. Thanks for watching, and stay ahead of the curve.